Hello and welcome to Investing Confidential. I label this talk Why Rates Going Higher. Now we're watching the stock markets go down. Stock market knows, okay? The Fed knows why rates are going higher. And now I'm going to tell you why I know the rates are going higher. Because if you've been watching my videos, the few of you that have been, you know that I've been talking about this for quite some time. Not just the fact that rates are going to stay high, but why they will go higher. Okay. And this is what I'm going to discuss during this little talk. So, the market's telling you something. Okay. You can't abandon what the market's telling you. The stock market's telling you, and more importantly, the bond market's been telling you this for quite some time. Here we have the 10-year bond. Okay. Folks, this is a breakout. This is what we call in technical terms a breakout. Okay. And it's going higher. Okay, bottom line, you have hedge funds shorting the 10-year bond because they know what I'm about to tell you. They see that the writing is on the wall. Okay, and it's not just what's happening in the U.S. You see here that in Canada, their bonds are breaking out. Their economy is in worse shape than ours, but their bonds are breaking out because we're linked, right? Canada and the U.S. have a linked currency. It's all dollarized, and I'll go into that why that's important. But look, you can't ignore the fact that the 10-year bond, our base currency, is breaking out. This is why the stock markets have been reacting. They've been watching this, and if you watch my videos, I've been showing you this. The breakout was happening. No one was paying attention. Everyone was all happy about, the Fed cutting. The Fed's not going to cut, folks. The Fed ain't going to cut probably till 2025. By the time the Fed, again, is so far behind the curve right now. They've been behind the curve since day one. They're trying to catch up. So when do you think the Fed's going to cut? When the economy is destroyed, wiped out? It's going to be too late. 2025. Okay. Look, as a result, look at the 30-year mortgage rates. You've seen this before. You see it every day on television. They've exploded. Absolutely exploded. And what's the result? I've shown this slide before. Okay. Housing over a long-term basis has already collapsed. But the problem is it's going lower. It's going lower because we haven't even begun to see the price cuts. We're just beginning. People want to move. They don't want to. People are getting fired. People don't want to go back to work full time, so they're getting fired. They don't want to. The ones that do, they bought houses in places like Austin and Nantucket and all these places. Now they want to sell. And guess what? There are no buyers anywhere. Nowhere to be found. Unless you're in New York area where morons are still paying up prices, and Miami. Other than that, no bids anywhere out of those two markets. There's no bids. Okay, San Francisco's collapsed. Los Angeles, if you live in Los Angeles, you're watching this video, get out now. With those laws they just passed, talk about crime. It's going to explode. Okay, and then here's another thing. Apartment vacancy. This is kind of the opposite. Apartment vacancies at highs. They're higher than pre-pandemic levels, or they're going higher than pre-pandemic levels for sure. The funny thing, if you remember a year and a half ago, people telling you, rents are going to be up for a long time. You're going to have to rent. You can't buy. Rent. Real estate companies want you to rent. Klaus Schwab from the World Economic Forum, he wants you to rent. He doesn't want you to own anything. Okay, but they're all wrong. Okay, apartment vacancies are going up. Guess what's happened to rental prices? Collapse. They will collapse. Okay, and eventually that's going to help, but it's going to be too late. Too late because, again, watch. Okay, here's small companies. Okay, this is a chart you should be scared. These are the companies, small businesses that drive the entire U.S. economy. And look at the interest expenses. They're ripped to the roof. Small companies are paying more money in interest. And what are they going to do? They're going to start laying off employees because they have to pay interest expense. This is a nightmare, an absolute nightmare. And the government isn't better because the interest rates that the government is about to start paying, and it has been paying, it's going to go into the trillions, folks. Into the trillions. Another reason why Believe it or not, this is inflationary. It's all inflationary. And guess what? With this crazy government we have, all this nutty stuff going on, you're going to get a government downgrade. Debt is it's inevitable. Interest rates spiking, the cost on our debt for the government to finance all this nonsense is spiking. The government's never going to default, but it's going to keep paying higher and higher rates, and they're going to have to do something. And I'm going to tell you why in a second. But this debt is going to get downgraded again, folks. I told you the first time. No one believed me. Boom, it happened. I'm telling you again, it's happening very sure. Moody's, all these guys are going to have to reevaluate what's going on in the U.S. Okay, and you know what? That's not even the real danger. Okay, because a tsunami is coming. It's coming very soon. Not coming tomorrow, maybe next week, but it's coming, because here you have the Japanese 10-year bond ripping to the sky. JGBs ripping to the sky because inflation is ripping in Japan. Japan has a cap on interest rates. This thing is, you're going to see the JGBs, the short term, already blowing through the cap, their base rate. So we look at this 10-year bond ripping to the sky. What does this tell you? A change in policy is imminent. They're going to have to get rid of this cap. What does that mean? As I told you before, you can look back at the videos we discussed this. Japanese, the largest holder of our debt, largest holder of European debt, especially corporate debt, is going to go back to Japan. They're going to sell, Mortimer, sell. And what is that going to do, folks? Guess what? Keep rates higher. No matter what we do, these rates will stay higher because of the selling, right? Remember, as if you have a big seller, a giant seller, which Japan's going to be, they're going to sell off our bond market. They're going to sell off European bond market. Prices are going to go down. Rates are going to go up. That's inevitable. Okay, that's a nightmare. And another inflationary trend, okay, again, these are all the reasons why these bonds are going up, because obviously somebody's anticipating this Japanese movement. Another inflationary trend here, okay, and I spoke about this before, is retail shrinkage, as you can see. It is a giant problem, okay? And this is a problem because the companies, again, I don't want to get into politics, but it is political, okay? They're afraid to arrest people in the cities. They're afraid. Or in certain cities, like cities in California, stealing from companies is legal. You can go in and steal less than $1,000 and get a fine. So what are they doing? They're stealing everything. Stealing everything. I was just in San Francisco recently. You go into a CVS, a Walgreens, any kind of store, they got plexiglass covering everything in downtown San Francisco. It's just a disgrace. The local politicians let it happen. And guess what? This is very, very inflationary. Mainly, it causes low prices in these areas, okay, in these at-risk neighborhoods, and all these neighborhoods are at risk where the stealing is going on, and in other neighborhoods as well. Guess what? These companies are going to raise prices, or the small stores that are going to be there to take the place of these large box retailer. They're going to have higher prices, much higher prices. You have no other choice. Travel across town or pay a high price. People are very inflationary. Again, inflation, rates, all linked. So I just basically told you, but why are bonds ripping? Look, there's an old saying they used to say back in the days, it's the economy, stupid. No, it's inflation, stupid. Sticky inflation. This whole idea of this transitory thing was a joke. This is why the Fed is behind the curve. This is why they're going to stay behind the curve. The Fed has officially lost control. Okay, there are people believing that the Fed will not raise. There are people thinking the Fed's going to raise once. Nah, the Fed's not going to have to raise once. They may have to raise 3 or 4 more times, folks. Yes, I said it. They may have to raise 3 or 4 more times. They've lost control. And they've lost control because you have massive strikes going on. The UAW, Ford, the strikes are spreading. And I told you, Ford doesn't care because there's no demand for cars. So they let the strike happen. They can replenish. They don't have to replenish their inventories. Let them sell down the inventories. Okay, they don't care, but they're going to care because they have to give in to the 40%, 50% wage demand, and it's happening everywhere. I told you, folks. Just read your local paper. Local municipal workers all over the country are going on strike. Okay, then you've got the other big thing, which is crude. Crude, I told you about, crude has broken out. It's going to 100, maybe more. And as you can see here, it's going up because obviously you have futures going higher. And what are the futures? Why are people worried? Because you've got low inventories around the world and you're talking about shortages, artificial shortages caused by Saudi and others, which are squeezing the US dollar. The US dollar, which has been very strong and has crushed gold and everything else, is going to collapse very soon. Okay? Which, again, thinking about it rationally, US dollar collapses, everything in dollars, all of the commodities which are pricing are going to go higher. They're going to be more expensive for everyone. What does that mean? Boom, inflation. So inflation stays higher at a high level. Interest rates, because of Japan, because of inflation, because of shrinkage, because of the stealing that's been accepted in this country, which is a disgrace, send everything higher. And then you got, finally, Jesus Christmas, you got Europe. Europe is imploding, folks. This is our, okay, sure, Mexico's our biggest trading partner, but Europe is where we go on vacation, we trade. Europe is it, and Europe has imploded. Okay, two charts here. Let's look at money supply in Europe. The liquidity, gone. This is a nightmare for consumers, a nightmare for banks, a nightmare for the economy. Gone. No money supply. It's collapsed. Okay, and then the strongest, largest, typically the largest country, the leading indicator for Europe, which is Germany. Take a look at housing prices. They are falling as fast as they've ever did since going back to World War II, when the country literally was in rubble. The German economy has collapsed. They're already in stagflation. Their housing prices are collapsing, and there's nothing anybody can do. This is going to take a political change, and unfortunately, it's going to be the wrong kind of political change, because it's going to move right, very, very right wing in Germany. It'll be a nightmare. And so rates are going higher while economies sink. Okay, what does this mean? Think about it. This is classic stagflation, folks, 1970 style. No matter how much the talking heads and the white, no. It's happening. Okay, you may call me Chicken Little, but if you guys, a few of you who have been listening to me know that I've been right on this. This is classic 1970s stagflation. Stock markets know the truth. The bond markets know the truth. And that's the bottom line. So watch the put-call ratio for oversold markets. You're going to get bear market rallies. Sell every rally, as I said. But people are starting to get real bearish. You're going to get a rally in the next few days, but sell it, because the reality is rates are going higher. There is no chance of a rate cut, no chance. And people think the consensus is maybe one rate raise, folks. I mean, multiple. And the US dollar will collapse despite higher rates. But it doesn't make any sense, but it's going to happen because of a debt downgrade, which is most likely going to happen as well. So for all you investors, as always, be careful out there.